Good afternoon, everyone. Can you hear me okay? I'm quadruple broadcasting. I'm on the free room. I'm on the options room. I always share with the chart patterns mastery, and I'm on YouTube. So I have as many places to to humiliate myself. So just to let you know on what we're doing today, basically there's a whole article about there's 150 billion in rebalancing by the end of the month. So the way that works is there's a ton of funds out there. So the thing in there is a lot of those funds are 50-50 funds. So they're short bonds. And I mean, so they have 50% bonds and they have 50% stock. The problem is sometimes the disparity gets just too much and they rebalance almost every month. Now, don't think they do it all in one day, but this is what I want to show you. So here is the SPX or the QQQ, either, but this is a 1 day chart. So this is from June 1st, right there, that explosion. So the market's right now, the S&P is way up. I mean, let's say 8%. I'm not adding right, but it's up a lot. On the other hand, the bond market is down in the dumps. Down in the dumps. Right here was the beginning of the month. It's down. So these funds have to sell stocks and buy bonds. They're way too loaded up on bonds. Now, most of the time I talk about if the bond market goes down, that'll make, the NASDAQ go down. That hasn't worked the last like 3 weeks with all this AI craziness. But, and by the way, can you hear me okay? Now, I'm going to have to reload. Give me a second. Here. Audio okay. Good. The free room, the audio wasn't working. And the chart patterns mastery, can you hear me okay, Mirza? Want to be sure of all this. All right, I got to reload. Yeah. Oh, I got to reload. Let me reload. I apologize for this, but usually when I share the screens a long time, this is what happens. I like to share my screens and help out as much as I can. There. Can you hear me now, Mirza? Yay. All right. So this is the way I look at it in here is there's disparity between the stocks and the bonds. So 50-50 funds by the end of the month, they do it every month. They're going to have to rebalance. Well, what you're seeing right now is the higher the bonds go, everybody's freaking out and saying, uh-oh, that rebalancing is starting. So when you saw the bonds start to rally at about 10:15, look what the NASDAQ did at 10:15. And it went straight down. So just keep that in mind. So the higher the bonds go today, the more that everybody's going to get spooked that rebalancing is starting. So now I'm not sure about all that. I'm just saying there are little ebbs and flows you can take advantage of. And that's what we're trying to do in the chart patterns mastery. Now, there are some other things going on. Number one, you have triple witching today. Now, everybody talks about triple witching. There's a lot of unwinding going on, but I still think, and I've seen it, it's a non-event usually, and I'll show you what I think, but this is the first thing I think. This is a Brecher Ledge. I'm not sure it's going to work this time, but that's when you get all these kinds of lines. Now, the wicks, it's a little rough in here, little rough with the wicks, but the way I'm looking at it of where to draw the line. But theoretically, that should be tighter. But theoretically, if it doesn't hold here, you're talking about it going down that amount. So that's another 13 points. As you see, it back tested it. So how about the NASDAQ? Well, it's not really a Brecher Ledge unless you go way back, but it has a rectangle. Let's just put it that way. So just want to show you that. That's what I'm watching in here. So right now, there are a couple of tells that I think are important. So we're always going over tells. So definitely going over tells. So what is my tell in here? My tell right now is that while the markets tried to rally in here, the internals went straight down. So that's the ES internals. But when that bounced up to that resistance, this didn't bounce. That gave me a good idea that we were going to have another leg down, which we have. So that's always go for the internals. I'm telling you, yesterday when everybody wanted to fade the market, the internals kept going up. They weren't great, but they kept going up. Today, I think what you're going to see is this. You go to an hourly on both. So there's that's sort of a ledge, but that's more a rectangle right here. There's your rectangle. Now, a lot of us, we talked about before the opening, was this a bull flag? Well, it looked more like a rectangle. All you had to do is if you did buy on the break, which we didn't, and the reason we didn't is because the advanced decline stunk on the opening. And a lot of the stocks like Apple stunk on the opening. So it takes a little anticipation also. But if this doesn't hold, you're talking about a break of the width. So that's about 161 points. Guess where it goes? It goes right in that zone, the path of least support. Just like if water leaks from your attic, where's it going to stop? It's going to stop at the basement. That's the most support. So if this doesn't hold, you're talking about a big calamity today. How about the ES? Well, that still could go to here and still be within the rectangle. That's about 5 more points. But you see the writing on the wall. Now, don't get me wrong. In this crazy market, maybe that's a bull flag. But I'm just telling you, if it gets under here, and I watch these stocks not bounce, so, and the advanced decline stay down, yeah, I think you're going to have a decisive breakdown. Now, when you've had this straight up market and you're trying to pick a top, if you mess around on the short side, you always got to take back half, even if you think it's going lower. You just got to take back half, whether you want to or not, because you're not in like the big old downtrends like you have back here. So you just don't have that. So you got to just take what you get. And that's what we've been doing. Now, the next thing is if you think we're going to have a bounce, so there's another way that I look at things. When I'm day trading, I'll take 4 time frames and I'll take the MACDs. I'll take an hourly. You see, it's not that oversold on the bottom left, right here. Not that oversold. A 15 was oversold. How did it work off the oversold? I always talk about how's it work it off? Does it work it off by going to a new high, or does it futz around like looks like this? So that's not working it off so hot. But I bet if you put a 5-minute, it's oversold. Well, it was. But as you see, it's not working off much oversold very well. So this doesn't bode well for the markets, but this little bounce you just got, that little bounce from support, the biggest key I look at is the big NASDAQ stocks. Did they bounce? Well, Tesla didn't. That's all I'm doing. I'm going on relative strength right now. How strong was the bounce of the individual stocks? Apple bounce, Google bounce, not by much. Adobe, that had great earnings, didn't bounce at all. Who knows of Meta? I don't understand that stock. I hardly trade it. But I do know that Tesla refused to bounce. Home Depot, that looks like a ledge to me. So what's a ledge? That's a ledge or close. The only problem with these ledges I talk about, they're sort of a bear flag with a horizontal trend line. I don't like seeing that little twerk underneath. But the biggest problem with these that a lot of people miss is it's got to have a lack of support on the way down. So maybe here. I wish it had more of an air hole. Now down here, if it gets under here, yeah, that would be a big deal. You have more of an air hole. That could be a Brecher Ledge later. Later. So just keep that in mind. Could be later. So right now, I'm just watching that. Now we're forming maybe a bear flag here. So there's no way I want to buy anything here. If I'm a futures trader, darn right, I'm shorting right here and stopping myself up here. That's about a 4-point stop. If I'm wrong, yeah, you lose 4 points. If I'm right, you make 20. Well, you make 15. I'm not adding right. But that's a good risk reward. But like I said, I get stopped all the time. You can even put a stop at the top of that candle, lose a point and a half. I mean, I'm just talking about probability and risk reward. So like today, I stunk in here, sort of. So we took a 10-cent loss in here, but then we took, I don't want to get into it, but a huge percentage gain in two other things. So we took our quick loss and then we made our big gain. So I'm not going to be 100% right. That's for sure. So just keep that in mind. The other thing, give me 1 second. So this is the way I look at it. The first thing is what's the lowest risk way? And by the way, like I said, we shorted something, we got stopped out for a 10-cent loss, we shorted something else, made good money. I don't want to get into all that kind of stuff. But we made good money. Then we did another one, we made good money, and we did another one, made good money. What's the moral of the story? You take your quick loss and you go to the next one. You look for a better setup. And that's what we did. Like I said, I didn't go for the ES right now because of all that support underneath. It's just too much support for me. I'll go back to it later, but it's just too darn support for me at the moment. So definitely we'll look later. There's your support. I still think this doesn't look so hot. So just, that's how I look at it. If I want to be aggressive, now we've already played this. I'm not touching it again until I see this rally and see if the component stocks within it act like dirt. So that's what I'm going to try to do. What do I mean by act like dirt? That they look like they have a lead blanket on. So when you have a parabolic thing, the daily charts that I trade with are bull flags. Go and check out these bull flags. Now, the problem is AI, I'm not talking about today. Because of these crazy moves, you can't trade off a daily. You got to trade off a 4-hour. And the 4-hour was a little more clear cut. This is why I don't like to be in these overnight. But you go and look at like Etsy. Yeah, that had a bull flag. How about CrowdStrike? That had a bull flag. I like going over the 4 hour in this type of environment. So that, I mean, that's what I've been doing. So definitely the 4 hour. And now all of the ones that are leaders are acting really poorly today, which also makes me think later. I don't know about now, but later the markets are going to go down. What are you seeing? Bond market down ticked a little and the stock market stabilized because people are thinking, oh, it's not going to happen today. I still think the way these are acting is the writings on the wall that we're going lower. So that's what I think, because I'm watching the leaders that brought up the market yesterday are not acting so hot. And then the one that had amazing earnings is not acting that hot. Then you get the economically sensitive not acting that hot. It just seems to me that combined with those charts I'm showing you, you got to play it on the short side. So got to play it on the short side. So, but I mean, I'm not doing specific trades for you because of the free room, but I'm just telling you on how I'm going to set it up today. Just want to let you know how I'm going to set it up. Now, of course, is going to happen. Well, you see what I see. That's a 15-minute chart. How about an hourly? You see what I see. So usually when I see it stabilize, I'm looking for what is forming a defined bear flag. That way, if I'm wrong, I'm just not going to lose that much. So I'd rather have this flat line like a Brecher Ledge. So let's see if there are any that are. So the NDX target is the width. Well, let me go to the NQ because I already have them in there. The width of that's 140 points, but that also includes the lack of support. So if that breaks, you're talking about down in this zone, like 15.2, another 140 points if it breaks. Now, a lot of times I'll see exactly what happened on a 1 minute where it breaks and then it works off the oversold as a bear flag and you get another chance. So there you go with the bear flag. And by the way, if you're a futures trader, darn right, if you short here, you get stopped here, you just short again when the reversal candle presents itself. So like I said, though, this might take an hour, might take an hour. So all I know is the stocks that I'm watching, like the Broadcoms on the bottom, just refuse to have a bounce. Crazy stock, but it refuses to have a bounce. Home Depot. So I'm going on shopping, economically sensitive, and I should really have up the craziest shit, Lam Research. And you see, they're just not bouncing. So, Don, yeah, you made it in there now. So, just to let you know, we've been trading. So, Don, on our charts pattern mastery, we're really learning about Brecher ledges. So, yesterday, when everything's gone nuts, I hope you don't mind me calling you out, but it was a great idea that this was one of the few stocks that had a Brecher ledge. So, and it's just, it has these whips back and forth, but it was a great call on your part. And when something's real volatile like that, this is a perfect situation. It breaks, it comes back to test it, and then you got another chance. It's amazing how that works. Now, without me looking, I bet the QQQ is breaking that bear flag. There you go. So just let you know, but those things work. So as you see, this is trying to hold gallantly. It's not doing a good job at the moment. So usually when I see this, there are three ways I try to play it. I'm just double checking to be sure everything's on. All right, there are three ways I try to play it. One of them is I could do the pure play and just go and short the QQQ like versus a stop up here. Just short it in here versus a stop. risking 50 cents. And what happens if you're right? Yeah, darn right, you're going to make a lot. But like I said, risking. I'd rather, like I said, that's one way to do it. The other way to do it is this way. You take a stock that refuses to rally at all, and you try to buy slightly out of the money puts that, because it's expiration, are really cheap, that look bad on an ultra short-term chart and don't have support. Like I said, I don't like that support. Now, keep in mind another thing. So many stocks had massive rallies yesterday, so they don't have a lot of support on the way down. Why did Caterpillar stop? I think you see why. So how about Deere? Yeah, has all that support. Maybe into here. That's about it. How about RCL? We were looking at the cruise lines. Yeah, that could be a good one later. Now, we were in that and didn't do well on that pop, but we made it in other things. But yeah, I'm going to be going over all of these and looking for the ones that are like a lead blanket. The point being, either you could short the Qs, you could buy slightly out of the money puts in some of these things, but I'd rather look for the stocks that, if this rallies, they don't bounce at all. That way, if this really rallies, they won't bounce. That just gives me an edge. And that's what I'm trying to do in here. Unfortunately, at lunchtime, it gets a little dull. But like I said, it's really weird what the traders are keen off of today. The bonds selling off, the NASDAQ rallying, because everybody's like, oh, I guess that rebalancing isn't happening now. If you're wondering what I'm talking about, I don't know if I still have the article up here. Let me see if I do. So at least I could share it. But please don't just take these things literally, because they could be dead wrong. Man, this is hard copying and pasting on 8 million different places. There. But it's just fascinating to watch that if the bonds are going down, so that, that rebalancing says they're going to buy bonds. So all of a sudden, when bonds go down, the NASDAQ goes up. It's just amazing on what the correlation today. So just, that's how I'm looking at it. It's amazing correlation. QQQs, that's another way to play it. But we usually only play the 0 DTE, even though we played them earlier. We played them fine. But usually the 0 DTE, unless I see an extremely tight bear flag, we don't buy premium. Because they'll just kill the premium. So we have to wait for our pitch on those. We've had a lot of success the last hour, believe it or not. But that's because they've had defined patterns. In fact, it's been less than, the last 10 minutes. But at the moment, bonds selling off, markets rallying. I don't know about you. I just find that interesting, that correlation. Yeah, like I mentioned before, overall, the bonds going down with the NASDAQ going up is bearish long term. But right now, with that thing I published about a rebalance, everybody's worried about bonds rallying, and that will be the beginning of the rebalance of stocks. So at the moment, traders are keying off the bonds the opposite way, just in a perverse way like that. So if the bonds rally, the NASDAQ sells off. So, I was on the floor a long time. That's how we do it, because you're keying off of sort of a news related event. So there you go. Bonds having another downtick, NASDAQ having another uptick. It's an amazing thing. So it's just changes every day. It just absolutely changes. And obviously, in the last month, the NASDAQ's gone straight up while the bonds have gone straight down. Eventually, that's bearish. But with this AI stuff, you just don't know when that's going to end. So it can go on like 1999. Well, really, it went from 1995 to 2000. So it can go longer than you ever imagine. Just, keep that in mind. So as you see, it's just amazing, this correlation. Now, like I said, long term, long term, long term, I think it's incredibly bearish. The bonds are here and the NASDAQ's here. And man, you can't fade it until you see a reversal pattern. The problem is the first reversal pattern, like a dark cloud cover, where a red takes back a big green, everybody's going to think they missed the move. As you see, those reversal candles, they were massive moves. So if you missed the beginning, right now you just got to wait for some kind of reversal candle, unless you're playing ultra short term. Ultra short term. But right now, the bonds selling off. Yeah, markets thinking rebalance isn't happening today. That's all it means to me, that the rebalance isn't happening now. And that's what I wanted to show you in here. And the VIX, I just don't look at the VIX. The VIX has so much to do with the futures and all that. So I'll show you. Number one, the VIX, to me, I don't look at except as a warning sign. The low VIX, the low put the call, the high bullish sentiment, record call buying yesterday. How did that work for the last month? Yeah, you get yourself hosed. You just don't have enough reasons yet. You can be cautious. You can be out at the end of the night. But if you see these bull flags like we jumped on yesterday, you jump on the bull flags until proven otherwise. And the bear flags just aren't going to work very well because it's in a massive uptrend. So I'm not saying the bonds are going up. I'm saying that there could be a rebalance, like I posted, by the end of the month. But I think every trader is keen off of to see if people are front running the rebalance. So if the bond market sells off, they're buying the NASDAQ because they don't think there's any rebalance happening. That's how it looks to me. Now, if this rallies out of nowhere like 16 ticks, yeah, I think that'll go down. But I'm just telling you right now, that's eventually what would happen. But there's a big key in here that a lot of people miss. When 50-50 funds rebalance, the bond market is much bigger than the stock market because it has different maturities. Maybe they bought preferred stocks. I mean, they would need to buy preferred stocks. It never affects the bond market as much as it affects the equity market. So, but you can use it as a little bit of a tell, at least for today. Traders seem to be keen off if the bonds are weak or strong in an inverse way with the NASDAQ. That's what it looks like to me. Yeah, but let me just go into it with the VIX. I want to show you something sort of interesting. So the VIX, I'm going to go to my saved order. I haven't done all these trades. It's just things I have an example so I can tell people, clients, of what I'm looking at. All right. This closed at 14 yesterday. That's a calendar. Now, obviously, if the VIX goes up, the calendar should go up. So it closed at 14. Now, theoretically, you say the VIX is down. Look at the calendar. Yeah, it's up 35 cents. So that VIX can be extremely misleading. That's all I'm saying. So I don't even look at the dollar. I should look at the dollar more, but I don't. And I haven't seen that kind of correlation. It might have one. I just haven't used it. I mean, if it works for someone, great. But when you get this crazy, crazy speculative bubble like we're getting, you just have to take quick profits. And you see what the VIX futures are doing, no doubt. But I would use the VIX futures more than I would use the VIX. And if I'm bullish on the VIX, there is no way I'm buying UVXY. UVXY loses value every day. They should ban this product. If you don't believe this loses value every day, look at a monthly chart. This is not a misprint. There you go. Yep, it was 2.5 billion. That's how much it's lost. Yeah, there 30,000 there to 2. It loses value every day. So it has to do with the front month and the next month in the VIX. And it usually always the second month goes back down to where the first month is, and the VX goes to where the VIX is. So I wouldn't trade that. If I do anything betting on the VIX going up, it's not going to be calls either. Made that mistake many times. I would do calendars. When I go to the VIX like this, they just don't move like you think they do. And the biggest reason is the farther out you go, the higher the volatility already. So that doesn't work. So the best way to do it is calendars. But let me show you how I try to use calendars. So TLT, like I said, when the rebalances happen, it has to do with TLT doesn't move as much as the equities do because it's a much huger product and it's multiple products, and it just doesn't work that way. I'm just using it as a tell because it's working. I mean, that's it. No more, no less. But if I'm going to play, let's say the VIX, number one, the biggest mistake I see with calendars is buying a calendar just because the VIX is cheap. A calendar is inherently bearish, a put calendar, because the farther out put has a higher delta than the shorter put. So I can go and show you. I mean, there. So that goes to show you, this is the SPX calendar I just showed you. Today, with an SPX 4430, see the offset 0, the delta is -3. So the whole point is it's inherently bearish. If you want to do it as a hedge against long stocks, it's fine. But I've had the most success with calendars when the market already has a reversal pattern, like here. or back here. So I'm paying higher on the calendar than it was like a couple of days before. But if you get the direction right, then you're probably going to be right on the calendar. Isn't that amazing? Bonds selling off, NASDAQ going up. You heard it here first. So the next thing now is, now that these have had rallies, somewhat rallies, are there any of the NASDAQ stocks that just refuse to go higher? The theory being that this is going to have another leg down just because the internals are so bad. That's the NASDAQ advanced decline, down 990. Now, this is the NASDAQ 100. This is all the NASDAQ stocks, but still it's a good gauge. So is there some stock that's acting so bad that you could just mess around on the downside? Now, you might say, why don't you find a stock that's acting great and buy it? The problem is I'm having a tough time finding any stock that's acting great. Just none of them are acting well. I mean, if I saw some bull flag, sure, I'd go ahead and maybe buy it. But as you see, none of these are acting that well. And Microsoft's acting fine, Meta's acting fine, no doubt about it. You're getting this kind of mania. But here you go. This rallied literally 40 points and this went down. So it's on expiration day. You got to be real careful about reading in to buy anything when just the advanced declines are so bad. I'm looking to short things on rallies. That's what I'm looking to do. By the way, I got to post this in the Chart Patterns Mastery. And crowd strikes. See, the problem with like the crowd strikes, I'd rather take the stocks that already are under something on, let's say, a 4-hour chart. Now, on the other hand, you're dead right about that reversal candle. But you see why it stopped. If you really want to play this later on the short side, I'd like to see the 15 back above zero and this forming a bear flag. It's just really tough to mess around when you have that support. But yeah, that's the kind of thing I'm looking for. No doubt about it today. I would just like to find some that have bear flags with nothing underneath. And as you see, probably saved you. It's just not the right time. Now, if these bonds, like I said, all of a sudden go up to here, and I know you asked about TLT, about do you buy it? The effects on the bonds is much more muted than the effects on the stocks. But I think people today are spooked by that article. So when you saw the bonds rally here and here, the NASDAQ sold off. So I just think that's what they're keying off of today. Right now, I don't see a thing yet. I'm seeing if there's anything else I want to do right now. Right now. Right here, right now. Yeah, nothing yet. Really, what I'm looking for now is what won't go up. That's what I want. I just think that gives me a good edge. So, like this, do I want to mess with the Home Depot? I just don't like messing with it with that kind of support. It might work, but it's just too much support for me. So I just don't do anything. But you're dead right about CrowdStrike. But I just can't impress enough that those reversal candles, like you're seeing, work a heck of a lot better if it's under some moving average. When it's up here, it's got to be a quick trade. I mean, that's the way it looks to me. Well, just to let you know, when it comes to Mosaic in the Chart Patterns Mastery and the Simpler Options Room, I've been talking about the big old flag in the DBA, and we bought DBA, and I keep harping on it all the way down, and we're still long DBA. In fact, this is probably one of the reasons the long-term bond is going down. That's probably one of the reasons that Powell said, hey, not so fast about future rate hikes, because you're starting to see commodity inflation. That's the one that includes oil. The other one is the agriculture. Long-term and Mosaic, well, let me just ask you, if the whole market goes down, you get a little nervous. You get a little nervous, no doubt about it. Who just asked about MOS? Oh, MOS sure looks like a bull flag to me. The only problem with MOS is going to be if the markets get nailed. But I like to use this MACD also. See on how it hooked up here, but the blue line was under zero and the stock was under a lot, the ATR trailing stop. I would much rather see this down here and this hold here. That's what I'd like to see. I also would be a lot more interested if it was over the 50 moving average. But theoretically, yeah, it looks pretty good, all things considered. Well, another one, CF. And that'll give you a good tell on Mosaic if uh, uh, CF goes up. That gives you a good tell that this is more likely to break up, not down. That's all I mean. So now what's acting like a wet blanket? What won't go up? Well, we know Caterpillar won't. A lot of things won't. And then that sells off and Microsoft goes up. So you see, at the moment, I don't have to do a darn thing. Not yet. Not yet. So keep that in mind. Then this is the problem with Netflix. You see the bull flag here, mile away. And it went up by that amount. Now, the problem is they're all stopping at those bull flags. So I'm just having a tough time playing Netflix one way or the other. Tesla, no clue. The only time I ever play Tesla is if I see bull flags or bear flags. That's it. Or little tops like that. Bull flag, bear flag. Breakdown, not really. So all I'll do in there is play consolidation patterns. If I try to pick a top, you get yourself destroyed. If I try to pick a bottom, sometimes I get destroyed. I would rather just play bull flags and bear flags. That's all I'm going to do in there. Yeah, no, I totally agree with you about Netflix. You're saying that it could go down, correct? In the free room. Totally agree. I just don't like that support. That's all. Yeah, you're right. One of them is Netflix not going up. That's a good point. In fact, I could take off which one's at the biggest support? Caterpillar. So let's put Netflix up there. That's a good idea. Yeah, there you go. I just wish it didn't have that support underneath. But let's look. That's a good question. 5-minute chart. That looks bad. How about a 15-minute? That's my problem right now. Well, I have a lot of problems, but that's the problem at the moment in Netflix. So, do you go and buy an out of the money put? Really difficult, really, really difficult when it's at support. Back here, sure, you could buy an out of the money call. Right now, when it's like this and sort of sloppy, it just doesn't have enough reasons for me to buy like the 435 put. Just can't do it. And it looks like garbage, no doubt about it. But I just don't like it at support. That's the problem I'm having. And by the way, in the YouTube thing, XPSS, I'm just going on chart patterns, and that's not telling me anything. Here's another one of those things that, well, I'll tell you, it loses also. It has slippage. Yeah, slippage means every day it loses value. Every day it loses value. So I don't like playing SPS. I don't like playing those unless I see a bear flag or a bull flag intraday. I don't like playing those. So it's just, I don't want to go against slippage. And like I said in here, definitely the thing that looks the worst is the NASDAQ as gauged by the internals. Just not very good internals. But if I'm going to try to play this going down, I got to play it on only the, sorry about the grammar, but you got to play it on what stocks aren't moving and they don't have support underneath. Like you were mentioning Netflix. Totally understand about you on that. So, and Northrop, no idea. I'm just going on these crazy things. So, and like I said, bonds, eventually it'll matter, but charts matter more. And right now you have that AI fanatical stuff. And so you can't key off the bonds other than this ultra short term thing. So, Northrop, well, that's what I'm seeing in Northrop. So, in answer to your question about Northrop, if you still get this stuff where they get in the caterpillars and the hard machinery kind of things, then you got to think Northrop's going to have another leg up. So I definitely see what you're seeing. The only problem I have in Northrop is the options don't trade. Look at that. You could drive a truck through that. I usually say that with deer, but you could drive a truck through those markets. The market makers don't want you to play. And if you buy 100 shares, it's $45,000. You can't go and buy, let's say, July. So you look at, let's say, the 65s. Well, it's got to go to 472 just to break even. So you might say, why don't we do some kind of spread? The problem is that's pretty expensive because it's got to go up 7, 8 points more. It's got to go up 10 points to break even. So it's just a tough call in Northrop of how to structure it. But yeah, I definitely see your idea. Let's put AMD up. I like that idea too. I'm trying to go look at all these ideas. I think these are great ideas. So I think these are great ideas. And, I'm happy to look at them. But I want to show you one thing after that. Yeah, AMD. Yeah, in hindsight, I missed it. No, I shorted right here 50,000 shares. I just forgot to post it. No, all kidding aside, where's the support? Well, now it's at support. Right there. But I'm telling you right now, you're definitely on the right track that when these start selling off, and this started selling off last Friday, you look for the bear flags and the stocks that are already rolling over. And then you look for the path of least resistance or at least support. So that was a good one, but there are going to be a lot other ones that are going to start having those red candles. And then you look for the first oversold rally and then a reversal candle to jump on the short side. That's what I do. Yeah, we're missing nothing. Great. All right. The other thing I wanted to show you that I think is pretty cool. So today is June X triple witching. So everybody's freaking out about triple witching. So how much time? Well, I got 3 minutes, but I'll still try to go over it. So I'm going to take the SPX. And I'm going to try to go to the last triple widget, which would be the last expiration. Not May. You want to go to the last. Let me put it up here. The last quarterly expiration. So that's March. So March, April, May. Yeah. So you want to go into March and you want to go to March 17th. St. Patty's Day, March 17th, right here. And we want to see what happened in the last hour, right there, March 17th. I just want to double check and be sure I'm doing it right. Yeah. So I'm going to go to March 17th. This is using on demand. I know I'm under the gun here. Yeah, we only have 3 more minutes, but I'm going to go and rewind this to March 17th. And I want to see if the SPX went crazy in the last hour. Look at that. That's triple witching. It did nothing. Nothing at all. Well, wait, wrong day. Want to see if anybody's listening. There. Nope. Look at that. What a pain in the rump. Nothing. So, triple witching gets a lot of hype. Of course, this time probably something will happen tremendous, but I'm just telling you, usually it doesn't do that much stuff. Maybe individual stocks, but as you see, it's just right now is sort of a chop fest. And like I said, in the chart patterns mastery, I'm just putting, this is just sort of a bonus to, when I'm dual broadcast to have you on, but I just can't answer questions when I'm answering questions on 3 other sites. When I get off, I'm happy to, sure. So I know I have to go in a minute, unfortunately, but like you see, non-event. I'm telling you, yeah, I think if you see these bonds rally at the end of the day, that's a whole different situation, but you don't have that yet. And that's the whole problem with messing around, betting on things going down when the first leg down is at support and oversold. It just isn't worth it. You want it to break support, rally under the support, and then get over, which then becomes resistance and then gets overbought. So, that's how I look at it. So, everybody take care. Thanks for the good questions. I really appreciate it. And have a great 3-day weekend.